Hey, what's going on, guys? Welcome back to mentfx. This is another very quick video, like 10 minutes, that should fix a huge portion of your psychology, no matter who you are, no matter what you're learning, no matter where you're learning. But if you're interested in trading, this should give you kind of a stepping stone in your own psychology and the way that you approach it and how you basically progress and get better. You can listen to this on a walk, on a run. There's just a little bit of visual aspects if you really want to end up watching it or seeing me or whatever. But there's a lot you can take from this. It's only around 10 minutes. If you can't watch 10 minutes of something that could help your psychology kind of forever or for the rest of your life, if you're interested in trading, then honestly, trading probably isn't for you. But if you are, enjoy this and let's get right into it. So my approach to psychology is very different. My approach to psychology is actually to give you the information you need so that psychology becomes a thing of the past. That's really it. And that's true for almost every single trader that becomes profitable. There isn't a book that fixes your psychology. There isn't a special thing that I can say to fix your psychology, because that's not how psychology works. A lot of people think it is, which is why when people spend an hour on a YouTube video or 3 hours on a psychology course or whatever, or they spend 3 hours or 6 hours reading a book on psychology, they come out of it with no change in the way that they operate. And the reason is because they haven't actually learned or understood what is necessary of them from trading. So instead, I go the other route, and that's what you're going to experience. And the other route is giving you the information and allowing you to put the information to work. And if you follow those steps, the psychology fixes itself because you realize what needs to be done to get where you want to get, right? And like you said just now, you can see in my past trades, I take big risk and always end up being liquidated. That's because you're trading without a system. You're trading without a proper risk basis. So again, here's what's in the portal. This is why you will and should be going through the portal. Because what's happening right now is when I teach you through this idea right here, which is very simply, you must move in these steps. And if you don't, you are fucking yourself. So Lord, what happened to you is you learned a piece of a system from some mentorship, probably some other area. You skipped proper risk with -1R as a staple of everything. You skipped case studying, you skipped data, you skipped back, and you went specifically right here. So what happens is if you skip any portion of this process right here, and this is literally the process for becoming profitable. If you skip any of these parts and you skip any one of them at any level and skip ahead to anything else, you will lose, liquidate yourself, blah, 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 blah. Right? Because if you have a system, but then you skip all this and you move to live execution, what happens? Well, you don't understand risk. You don't understand what that risk entails from a psychology perspective or from a confidence perspective. You don't know what it looks like from a standpoint of win rate, of loss rate, of how losses make up for your wins, etc. And all of a sudden, no shit, you blow an account. So notice how the teaching isn't, I'm gonna give you the special pill that changes the way you think about that makes you change the way you think about risk so that you forever, never make a mistake again. Your psychology is gonna get rewired to this beautiful, mushroom experience. That's not how we really do things here, right? Instead, we work through the actual process of profitability. And if you follow the process, you will not make those mistakes. But of course, to follow the process takes time. It takes the ability, at least right now, to decide, hey, I'm going to do this as a skill set, not as a thing to make money. And all of a sudden, your focus shifts completely to the stuff that you have to focus on, right? Because right now, I can tell your focus, especially with the message you wrote, right? I take big risk and always end up being liquidated. Your focus right now is make money, make money, make money. That's all I want to do. I should be taking trades. I should be taking on risk. I should be looking at markets. I should be taking things. And as a result, of course, you end up in this place where you're like, fuck, I keep losing. How long is it going to take for me to win? Right? Instead of thinking of, fuck, I'm losing. How long is it going to take for me to win? Let me get on alive. You should just be thinking, I'm not a winning trader at the moment. I'm not a profitable trader because I don't have the information. That's why. Not because you're not special or you're unique in this weird way that you think and nobody can match the way that you think. And as a result, you're just fucked. Right? It's just simply a lack of process. Right? And you said, true, even if I make $100 from $10, I don't close it because it's too little for me to close it. Yeah, so again, you're trading completely based on emotion. You're trading completely based on, I've seen people turn $100 into 10K and I want to do that. This is complete nonsense. Move away from it. Focus on real learning. Focus on your own life as you focus on real learning and branch those over time. That is how you become a profitable trader that's able to trade full time. That's it. HD says, in my opinion, psychology boils down to having a good understanding of price and your own tested strategy. And of course, exposure. First time you take 3 losses in a row. Yeah, you have to take losses. I mean, like, take a look at this. Let's go back to this for a second. I was speaking about my own performance for a while, right? So, Lord, this is my current performance over the last, like, basically, here you can see this is trade 125. This is trade 150. What do you notice about the last 25 trades that I took? Lord, this is for you, but anyone else can answer too. But don't look at the chat, Lord, just type it. What do you notice specifically about the last 25 trades that I've taken, right? There's a very specific thing that's going on here. Yeah, exactly, Lord. For the most part, there's no wins. There's no move to new all-time highs. There's no money being made, right? I'm just in drawdown. That's it. And yet, after literally, if you think about this, 25 trades, which for me takes about probably 2, 3, 4 months because I trade a higher time frame, so I'm waiting a lot of the time, right? It means that basically for the last few months, I've had to sit on my ass, and every action that I took resulted in nothing occurring, right? And yet, through all this, I'm here talking with the utmost confidence in my system, in the way that I approach, in the way that I think, and I have no problem about it, right? For you, especially where you are right now, it's very, very likely that as you experience even this right here, you're already have come close to blowing an account, right? Because there's a misunderstanding of risk. I've had a pro-rate risk, so you're already taking over-risk trades, which means that your -1s are not -1s, right? Your trades that begin to lose are no longer simple losses. They're increased losses because you get in again and again and again and again, or you average down, double up, right? And all of a sudden, instead of being here, your account's around here or here, and you're back to being blown, or you're even like in negative, right? That's very likely what's happening to you, and it happens to a lot of people. Because when you don't have a, let's say, relationship with losses, a good one, because the reality is most of trading is a good relationship with losses. Understanding why losses are so crucial to a good system, and if you don't, you lose, right? So you're at a point where just this moment right here is enough for you to blow an account. Whereas for me, I'll go through 25 trades, 3 to 4 months, right? 2 to 3 months, whatever, of literally nothingness, of nothing happening, and yet come out as a break-even trader during that time. And when things get really good, I'll make a fuck ton of money, right? Because what you don't see here, these are all trades, right? What you don't see inside of these are all the times where I literally did nothing or didn't take anything. A good example can refer back to last week, where you guys know I spoke a little bit about the fact that I thought, let me go like this, that I thought this stock or this market looked good. I even drew it out. I said, there's a very high chance that it could do this. I even drew it, right? It could make the stage 2, but I'm not interested in this action because of what the overall market is doing. The overall market is showing that money is not coming to market. The overall market is demonstrating that money doesn't want to come to market. So a good looking market, I skip and I just watch. A good looking market, I skip and I just watch. A good looking market, I skipped. If you remember, I told you guys that I was skipping this thing even though it looked perfect and could go. I skipped, and guess what? I'm rewarded for that. So what you don't end up seeing inside of this kind of equity curve is all the trades that were skipped, right? Because an equity curve is only demonstrating what? Well, you guys can answer this question even. What does an actual equity curve show of any data, of forward testing, of live trading, of past data, of anything? What does an equity curve actually show you? Exactly, just like Schelling said. It shows you only the trades that were actually taken, right? So all of this right here is the association of only trades taken. If you could imagine another part of the pie chart that said times of trades not taken, right? Where literally there's just trades that are happening, but nothing is being taken, right? This would be insane. Most of it would be like the blue color that would demonstrate, there we go. These are trades not taken, and then you have win rate, break-even rate, loss rate, right? My equity curve or my balance, whatever, would look like this, to put it simply. It would look like this, and then you have win rate right here, right? Where basically you have your win rate, you have your break-even rate, you have your loss rate, right? And then this part right here is all basically nothing to do. Right? This right here, this nothing to do, is one of the most misunderstood parts of trading for everybody that has ever touched an account. And a lot of trading, or a lot of trading profitably, comes down to doing this part right here, right? And being, and basically allowing yourself to do this. right? There has not been a single trader that I have spoken to and worked with that has become profitable that hasn't told me that the reason they became profitable was because they recognized this part right here. They didn't say it's because of increasing their win rate. They didn't even say it's because of decreasing their break-even rate or increasing their break-even rate or increasing their losses or increasing the RR they make. It was none of that. For the most part, the most profitable traders that I've worked with that have found profitability, that are funded, that have told me about their own experiences, everything came down to an understanding that if they simply avoid trading most action, they make more money. Right, so that's something to really, really hone in on and understand truly about your system. And hopefully that's something you take away from this webinar specifically, because quite literally, right, I make money, mentfx, whatever, I make money by not taking and doing things, right? Literally, I made money last week because I didn't do anything. Could I have done something? Yes. Would doing something mean I'm making money? No. If I had executed or tried to execute on some of the markets that I've been watching or some of the markets that kind of look good. So if I tried to execute this, there's a chance I come out on the bottom, right? There's a chance maybe there's like a long inside. Sorry, there we go. I think there's a chance maybe there's a long somewhere inside of there, probably, right? You could even enter, like, you could think about this as a V entry. If I was entering off the V alone, right? Here's your MMB1. MMB1 potentially, right? One of the ways that you could enter this, you could literally enter through this. Maybe you have your stop that's bigger and you're still in this trade, or you enter with a smaller stop and this is a stop out, right? This is potentially an entry that might have happened on a lower. Like I can take a look. You know, there's a chance that, yeah, like take a look at this. Let me move this out of the way. Here we are. All right, there's a chance that, you know, someone executes this right here or this right here, and that in itself is a wick into a loss, right? If I took the action of trading last week, I actually would have added another loss to my list rather than adding nothing, right? So this begs the question of, and should demonstrate to a lot of people that most of the time not taking an action is a lot more profitable than taking an action, which is a very, very crazy thing to understand initially, but makes more and more sense the more trading that you do, because you start realizing that most action isn't ripe in most cases to actually take an action. So yeah.